Hello.
Hey, how are you?
I'm very good. How are you?
Good. Really excited to talk to you today. Yeah.
Likewise. I thought this morning, damn, I need a hat and I don't have one and I did not have time to go out and get one.
Oh, good.
That's
Oh, good.
great.
Well, it's good to see you. Thanks for joining us. And if you want, I know everybody's probably heard a little bit about you guys, knows a bit of what you're doing. You're definitely kind of in that cool up and coming category, but why don't you introduce yourself and tell us a little bit about what you do?
For sure, yeah. I'm Natasha Vernier. I'm the CEO and co-founder of Cable. Cable automates the effectiveness testing of financial crime controls. So something a little bit different from most of the other reg tech products out there. We think about the requirements that banks and regulated fintechs and MSPs have with regards to financial crime to really fall into two main buckets. The first bucket being the need to have controls in place. And we think of those controls as everything from CIP checks, KYC, KYB, OFAC screening, transaction monitoring, and so on, for which there are just so many fantastic companies that you can get those things from, some of whom are our partners like Alloy and others. And then the second requirement that those banks, fintechs, and so on have is to test if those controls actually work. And the requirement in the regulation is for that testing to be independent. And that is something that hasn't been automated until we've come along and automated it. And so the way that this is normally done is through manual dip sampling. We automatically monitor 100% of accounts and transactions. And because we don't think that you can actually build controls and also independently test the effectiveness of those controls, it means the likes of, the Sardines and the Unit 21s hopefully become really wonderful partners for us.
I
This
love
is
it.
perfect. Okay, I really hope everybody caught that.
I did. I
Man, that
loved
was
it.
pretty fast. And really what we're talking about here is there's multiple parties and multiple pieces to this thing and great new companies today that will attack a part of this or a piece of this. But in the overall, language of let's say you've got somebody at your bank that's in charge of, monitoring. So when the regulator comes in, and let's talk about financial crime for a minute, what are we doing, right? Well, we can talk about these other companies that we've employed. We can talk about our staff. We can talk about all these things, AML and the rest of it. But the overall, how do you really know what's happening
Which
on each of these levels that are being addressed? And you're doing this in a way to where you literally have to have your staff come in and give a dissertation of what all these processes are. And we still haven't covered the overall.
Right, and said a different way, basically the bank looks like the primary regulator without any of the tool set to know how to actually, regulate or monitor is probably a better word, right? So I
Yeah.
love what you guys are doing. I think it's a really cool approach, and I think it's been such a big problem, right? And it's been something that's evolved a lot, right? Think about the monitoring side. I mean, does that mean we need to monitor the fintech's front end? Do we need to monitor their language, make sure they're not using words like bank, right? I mean, there's all this stuff that's come up that didn't exist even
Right.
5 years ago. A lot of this is new, right? Or even if it did exist, it had damn sure never been enforced before, and now it's being enforced everywhere, and it's a huge topic.
I love all this. I mean, I think what somebody needs to do, if you spend the time, which most people don't, to actually read the consent orders that are going out these days, and you're going to find a recurring theme with the UDAP violations, and all of the things that go down here that, oh, I didn't think of that one, right? Missed that by this much. We got that part. We got this big piece covered and we missed that part right there. And all of it is it's a symphony that all must work. It
Well
needs
said.
to work together, right? And you guys are like a conductor, I think, of the symphony that can bring it all together and make all these things happen and then cover the overall in a way that's not being done today. That's almost like one-stop shop compliance for your compliance team. Is that a good way to look at it?
I used to play the violin and I used to be in an orchestra. And I like your conductor analogy because I wonder if the conductor is the compliance officer, the chief compliance officer of a bank, and they have all of their different teams doing different areas of compliance. You've got your BSA AML compliance, and you've got your UDAP and your Regi, and all the different areas of compliance. And today, it's like conducting that orchestra with all of those different teams, but none of them have music. And you're hoping that they all play together and it sounds good, but nobody knows what's going on. because nobody has insight into their data. Like one of the most fascinating things that we've understood the last number of years speaking with all of these banks and fintechs is data is still such a problem in banks. And one of the things that we do is we take in all of this data from all of our customers and we help our banks understand what it looks like and what is in there. And through that process, we can then also, of course, automatically tell them if they are breaching any regulatory requirements or in compliance with any controls they have in place. And that's the music sheet. That is now, here is the information, here's the data you need to understand what your little team, your little compliance hub is doing. But without that music, there is no way that chief compliance officer can stand there and conduct their orchestra in a way that will sound at all appealing to their regulators.
No, this is good. Great. You know, the people argue with me about this all the time that, no, man, regulators, they come here to beat my ass, right? I mean, they come here to beat me up. And it's like, what they're really trying to do, guys, is to make sure that what is going on is what's supposed to be going on. Mm-hmm. And because we've changed banking, then they're trying to catch up and they're trying to figure this out. You've got to be able to be in a position where you can, I hate the word signaling, but you know, we need to, okay, I'm going to go full blown woke here. You ready?
I'm ready to go,
okay, man. You need to be woke enough on these things to be able to trigger yourself to signal to a regulator what the hell you're doing before he walks in the door. Yeah. Okay. So when he walks in the door, he already knows you're doing something and you've explained what this is and you've shown him what this is. Then when he gets there, he gets to real live in color, see what you're doing and go, thank you. Well, that's all he wanted in the first place. You've got to educate him on what you're doing that solves his problem.
That's absolutely. We're calling this compliance 3.0 internally, because if you build it up, compliance 1.0 is, you know, you walked into a branch and you tried to open a bank account. You had to give some information over. They looked you in the white of the eyes and you got your account to get money in or out. You went into the branch and you knew your bank teller. Compliance 2.0 was bringing this all online because of the internet and iPhones and digital banking. And so compliance 2.0 was all about automated controls, automated onboarding, but you still have manual testing. Mm-hmm. And the regulators in compliance 2.0 cared a lot more about checkbox compliance. The regulation says you must have transaction monitoring. Do you have it in place or not? Yes, you're fine. If you don't have it in place, you get a fine. You get a consent order. Compliance 3.0 is now all about effectiveness because, yes, you're right. No one reads the consent orders in detail. But if you do, the trend over the last 2 to 3 years has been about effectiveness. The regulators want to know, not only have you checked the box, but what are the outcomes of what you're doing? Are you doing what you're supposed to be doing? It's no matter just a case of, yes, you've got transaction monitoring in place, but are you flagging the right people? Are you doing so effectively? How many false positives do you have? Are your rules working all the time? When you change rules, do you know about them? And can you evidence that to your regulators? So that's compliance 3.0, and that's the field that we're playing in.
This is why I was so damned excited to have her on here. Is okay, we're going to do digital transformation. COVID comes along, accelerates digital transformation, and oops, we forgot about how to do regulatory compliance in a new digital automated way. Right. This is a hole that has been in the boat for so long. Mm-hmm. We've been bailing water out of this boat as fast as we can go, and they come in here and throw another consent order on you. Right, and it's like, how do we solve this? There's a bunch of ways that we can solve things on the technology front. As far as, you know, how do you want to run your sidecar? How do you want to run these operational things to FBO this over here? But in the end, you've got to just settle down and realize the fact that when you digitally onboard people, you don't know if they're a ghost or a real person. They're not coming into the branch, right? Like she said. And when we look at that problem from a different way and go, okay, I've got to be able to now do every bit of compliance that I was doing before. It's different when somebody walks in and says, hey, I'm going to give blood and here's my driver's license and ready to that and go, yep, that's you, Tanner. Right. That's you. Okay. When I don't know that and I can't really be sure of that, all my regulatory practices are just vanish.
And you've got the fraudster theme, right? Looking to penetrate in different places and in mass, right? I mean, we've seen some of these that have come down and been able to dig into the depths. I mean, you're talking about like hundreds of thousands of accounts in no time. right, that are all fraudulent and bad. And that's the effort, right? That's what they're trying to do. So it's a difficult hurdle.
But to defend the bankers a minute, hey man, there's a lot of this stuff that was done by my core, or it was done by my account opening. This was automated for me. This is new ground. Also, I never really had to worry about my customers trying to cheat me.
Or your customer's customer.
Right. And so all of a sudden now I've got some bad group in North Korea or something that's coming out here, they're trying to fraudulently hack our systems and do these things and doing it in a way that I can't even tell, again, with that driver's license and you giving blood to make sure that I know who you are. All right. Taking on that responsibility when your next level client, let's say it's a fintech, right? Okay. He may be running out of money trying to cut a corner. He may be having a really good marketing idea, not even knowing that he's doing something that's not in compliance. It's up to you to do this. Okay, so as the banker, he's like, great, I've got all this responsibility. So then what does the consultant tell him? You need to hire 800 people. And you're over here going, no, you don't. Right. There's a technology solution for this. And thank goodness you finally arrived. Glad to see you.
That's right. When I spoke to the head of financial crime for one of the largest banks in America, I won't name it. Just in their lending team alone, they had 1,500 people doing manual testing. And this bank probably has 5 divisions of a similar size. I mean, that's $30 million worth of cost annually, just in that part of the business, manually testing accounts. We'll happily take half of that to help them out.
Hey, good trade, right? I want to real quick. So you touched a little bit on the data thing, and this is something I've thought about a lot as I've dug in more and more with, especially on the fintech side. I don't think that the fintechs or the banker community really understands the disconnect, and a lot of it has to do with real time. So if you looked at most of your fintech ecosystem, they tend to think in real time, right? Everything is APIs, especially in the payments world. Everything is real time, right? And so you'll run into a lot of your fintech companies that won't have, I won't say system of record, but what we would all think of as a core, right? Because their ledger is pretty damn simple because everything is real time. And then when it comes time to interface to a bank and I need to produce X, and that bank has all these various batches that may be on different time values, things like compliance come into place. And then we need to monitor this maze and map that we've created. It gets really interesting, right? So I'd love for you to kind of touch on some of that. This data thing is not simple, and trying to bring multiple parties together that have fairly different operating models just makes huge complexity.
Yeah, this is definitely a problem. One of our partners is Treasury Prime, and I mean their main goal is to provide just the standard with which banks and fintechs or really any technology company can actually communicate. And that's exactly the problem here. We spend our days speaking to banks, often community banks, but some of the larger banks. And I think one bank that we've spoken to, spoken to hundreds and hundreds of banks, actually has the data of all of their fintechs. Every other single bank we've spoken to just does not have that data. And that's scary if you think about it, because those banks are ultimately the owners of those customer relationships. And the difficulty for them of getting that data, a lot of these banks don't have engineering teams. It's not just a case of, oh, well, we can do this integration. It's, well, actually, we need to think about how we even run this bank. Do we need to change the type of company we are? Do we need to introduce the concept of an engineering team? If we do, how do you start building an engineering team in a 100-year-old bank that has a very set way of doing things? It's a really big problem. I was at a dinner last night with a number of compliance officers, and we were talking about how the cores, as you allude to, they really do a significant amount of banking for a lot of the community banks. Yeah. And so you do wonder, will they end up being scrutinized by the regulators? Will the regulators start to look at them and require more of them?
It's a fair question. I think, you think about FFIEC and some of that side, and I think watching where some of these things are going and some of the efforts that the cores are going through, right? Modernizing, AKA we're going to band-aid this into where it operates like it's real time. I think some of that's probably net positive. We'll see, right? There's a lot of things work in that direction. But what you have also is a lot of, if we took our top, 4, maybe 6 top selling cores over, the last decade or so, pretty solid, but you still got a ton of banks on old stuff and nobody wants to say the word sunset and do some massive conversion. And so it kind of depends on the environment. Some things are getting better and there's definitely, at least we're hearing and seeing some focus there. One of the things that gets really interesting here. So think about something as simple as like doing an account opening, right? And when we're talking about needing to do something real time, we've got that multi-party hierarchy, right? And all that going on. And then we need to monitor and think about compliance, KYC, everything else. Think about all the APIs and what we would need to go through there just to open an account, do all of our checks, and then we got to fund the damn thing, right? And do we have a settlement account with the fintech and do they move money? And okay, now are we real time opening and funding an account, and what risks did we actually introduce? And so it's not historically, it doesn't fit within the boundaries of traditional banking risk management, right? Which is also the opportunity from the fintech side for giving a better experience. And so there's a bit of a clash there. And I actually think both sides are right. It just depends on the issue, but you see it a lot.
What you guys are talking about right now, this is so cool. This is why everybody wants to bitch about legacy cores, right? Okay. And why I always just say, then why don't you write one? Okay, we can't. Why? Because compliance. Okay, so we'll create a modern core. That is a nice way of, let's say, core light.
A piece.
It's a part of it. Okay, it's not the
Yeah,
whole
just the
enchilada,
ledger.
right? And if it was, then you'd have one.
Right.
So you don't. So let's just say that one more time. You don't. What you have is a ledger.
Right.
There's a hell of a difference between that and a compliant core.
Talk about a loan package,
Okay.
right? Yeah.
The core is built to run a bank and its customers, not fintechs and all their customers, right? That's not the way they're set up. That's not the way they're built. And so we've moved into this digital transformation era to where all of a sudden everybody's doing things online. And now we also have these subcategories of fintechs that are working through our sponsor banks. We didn't catch up until now to be able to actually address the issues in the room. And then we went through what I call it the easy button. You know, let's grab a connector. And hey, don't worry, I'll take care of that for you. Yeah, sure you will, buddy.
Right.
And now and we'll get a group of bankers together to collaborate. And it's like they couldn't solve the thing in a million years. And then we have a group of collaboration of consent orders.
Right.
We still haven't gotten anywhere. Okay. Until we step back. And this is what Tanner and I, with all of our guests and all these times of doing this, have been trying to say to people. There's a moment where you're going to have to step backwards to be able to move forward. Okay. I hope to God you're coming to the roundup this year. I don't know if anybody's even mentioned that to you, but we love having companies like yours that can sit down and explain this in more than 30 minutes, right? We can really spend some time and walk through these things with bankers. There is an opportunity right now to do so much in community banking. And we're going to blow this opportunity because we had a few bad actors go out there and spoil milk. Right. You know, they spilt the milk all over the table and everybody's like, oh boy, I don't want to do that.
When it's still,
man, you really
future.
need to do this. You really need to do this, but you got to do it the right way. There's ways to set up the subledgering process and the FBO process that's fully compliant. Yes, Sardina, these companies, you know, Alloy, there's a ton of neat things that we can do here, but you're going to have to incorporate cable along the way here. Okay. Now put this whole picture together. This is not that complicated. Am I on the right path?
Yeah, I agree with you. And I think there is a worry that because of all the consent orders and a lot of the rumors in the industry that actually maybe banking as a service won't exist, or the fintechs will all be sort of ordered out of the arena. But actually, I think the model provides too much benefit to community banks. And ultimately, we need community banks for access. Access to banking is a fundamental right, and we need to continue to be able to provide that to everybody. And to do that, we need community banks, and we need also lots of different fintechs that can provide products that banks are scared to, are afraid to, can't because of their own risk appetites, can't because of the intense regulatory scrutiny. And so I think that we will continue to see banking as a service and these fintechs. But yes, you're right. We need the compliance to be solved from day one. And too often over the last 3 or 4 years, I suppose really with COVID and the crazy roller coaster of intense funding that went with COVID, we saw a lot of fintechs that did not consider compliance on day one. And I think that the change will be that compliance is just a non-negotiable, which is what it should be, right? That's how banks think about it.
That's well said.
Their strength.
Yeah, to the point, I think There's a lot of this conversation that I personally think is incredibly silly, that all of this regulation and consent orders and everything is the regulatory backlash trying to kill fintechs and stop BaaS. Have any of us, I mean, historically, have we ever seen them put focus on something that they want to fail and make go away, or they put focus on what they're terrified is going to be the future? That's my point, right?
Yeah.
It's very clear, especially reading through tri-party guidance, and when you read everything in detail and have the conversations with all of them, everyone's terrified that this is the future that's going to completely redefine how banking is delivered to an end user. And so there's this scramble of throw away the carrot and pick up the stick.
That's right.
Right. And so to me, and I think to your point, Natasha, this is a super positive of maturity for the space. It's a painful one, damn sure. And it's the beginning of an evolution, but it's not just here to stay. My sense from the regulatory environment is they think this is going to overtake everybody, right?
Yeah.
And we're in a transformational shift as fast as you
They're
can.
not really
right?
down with Bitcoin, but they're damn sure down with banking as a
Right,
service.
right.
I like the idea of this whole thing, and they're really trying to step in and coordinate this 1033, all the rest of it. They see where this is going. Okay.
But best for the consumer in a compliant way, check. Protecting the consumer, absolutely. But that's a hell of a balancing act, right? When you think about let's be innovative and create competition, right? But at the same time, let's protect the consumer. I mean, that's the balance that's as old as time, and I think it's a difficult one for everybody to manage.
So what's the number one thing you see in financial crimes that you guys solve for that others don't?
We tell you if you have breached regulation in real time. So any single account, any single end customer, or any single transaction that does not comply with the BSA AML requirements that you have, or any unique controls that you want in place, we'll tell you as it happens. So the change there within banking, I mean, working in banks, banks have remediation projects going on all of the time. There are things discovered that started 6 months ago. You have to hire in 10 temporary workers to help remediate the backlog of customers that have been onboarded since. It's painful, it's timely, it's super expensive. That all changes if you know immediately if a single account has not met every single one of those regulatory requirements and controls, and if every single transaction has also met those requirements. So it's just a shift in mindset. It is a way to think differently about what banking even is and what compliance is.
Are you touching on like almost compliance debt? Like, I'll give you a good example. We see this a lot where, somebody has made an error that they don't catch for 2 years, and they say, "Oh my gosh, we got to change our contracts," right? And now I've got almost branched contracts. I can handle the old stuff the old way and slowly convert. Is that kind of to your point of the shorter time value of the issue, the smaller the issue?
Absolutely. And also the happier the regulators are, right? If you, to your point, right, if you go to a regulator when they come in for their review, or even beforehand, and you say, we had this OFAC issue, happens all the time. We have this OFAC issue. We onboarded a customer that was a true positive, but we actually offboarded them the same day. And we know that there are no others because we have real-time 100% monitoring across all of our customers. The regulators will look at that very, very differently than you going to them and saying, we've just discovered that for the last year, we've been onboarding sanctioned entities and we're still trying to work out how many there are, and we still have not therefore been able to offboard them all. Those are two very, very different conversations.
Well, I mean, in every bank, I mean, whether it's SARS or whether it's, debit side where you've got, maybe or even credit where you've got chargebacks, you've got other issues out there. There's been a tremendous amount of time and effort on this stuff that is all systemic from the original problem.
And typically manual.
Right. If you catch these things same day or early on in the game, you're actually hedging your bets for problems down the road. So all of this comes into faster, cheaper, better, right? And what we kind of try to pound the table is that the opportunities going forward. And guys, everything we're talking about right now has nothing to do with being a sponsor bank or BaaS banking. That's just banking, right? And so you need this no matter what.
Precursor.
Because you've got digital accounts as well.
Right.
And so all of these things are just mainstream America today. And one of the things that really, I get mad about some of this, right, is we've scared the hell out of everybody. So nobody wants to do anything, which is always an excellent excuse for a banker to sit down in his chair and not do anything. You can't sit in your damn chair any
I
longer.
agree.
You've got to get in the game. All right. And I mean,
I
we have
get frustrated
companies.
by it too.
If somebody turned the camera and the microphone off and listen to us talk for a while, man, there's a bunch of companies coming after your business accounts. There's a bunch of people that are coming after you. You can't just sit down and wait till they ate your leg off and go, wow, there's sharks in the
To say this a different
coming.
way, I think to Natasha's earlier point, a lot of the narrative around BaaS, consent orders, and all this negativity has had a lot of bankers that are taking a step back and a wait and see approach, and that's a good way to die.
That's exactly our point.
That's my fear, to be honest with you. I
wanna
think
know
there's
how to do it,
massive risk in
we
waiting.
can show you how to do it. But
Yeah.
listening to the people that did it in the past and failed or
Yeah.
got consent orders, maybe not the best source of information.
Awesome. That was well said.
But yeah, I love having you on here. I wanted to just hear all these cool things of how you go about it. And I mean, I wanted you to be able to share some of this with the other bankers, regular bankers, that these are solutions. Now think about this for a minute. If you got her product in your bank, now taking a look at these other alternative ways to make money as a banker becomes much more attainable, right? Am I right?
Well said.
Absolutely. And especially in the banking as a service world, because our model also allows our banks to make money from cable if their fintechs are using us through our rev share opportunity, which makes our banks actually able to make even more money from their fintechs from increased compliance. You're getting not only increased compliance, but you're also getting money from that, which is just a no-brainer, right?
I think it's something we're going to see more of. And I've mentioned this many times before, for more privately to BaaS banks, but I think the BaaS banks have kind of from the early days thought sort of that customer theme as opposed to thinking about kind of like the regulator theme or like a core provider would. And they're getting the short end of the stick when their fintechs show up with all these different third parties and contracts and a maze and a mess, right? To your point. And I think taking a little bit more control as we're seeing from some, to your point, hey, why don't you go out and use this service, right? Maybe I'll get a discount for you if you go through me, and maybe I'll get a kickback out of the thing and everybody wins. And all the while you're making something that's safer, more efficient, et cetera, et cetera. I think we're going to see more of that. So I'm really happy to hear that from you guys. I think it's really smart too.
Yeah, that's absolutely right. We're more compliant, you're more compliant. As a fintech, you've got more chance of onboarding more customers, raising more money, lasting longer, building a sustainable business. From our point of view, we get more and more deposits and everybody makes more money. It just sounds like a win-win situation.
This is exactly why I mean, I know a million people that are AML just badasses, right? And they're always weird, right? In a cool way.
Yeah.
And I love them. I think they're just the most interesting people in the world that really dig into AML.
Of depth.
And every single one of them, when you start talking about what's great solutions out there, your name comes up every single time.
Yeah.
That's awesome to hear. Well, yeah, I mean, we've never not found ways to help our customers become more effective. We have always found ways to enable them to resolve breaches and failures. And everybody has them. It's not something to be scared about. The important thing is make sure you deal with it before your regulators find them.
Outstanding. Well, look, we got hooked up to the BaaS Association. It's been super cool. Glad to have you. Glad to have the conversation. But I want to give you a couple of minutes, just final thoughts, anything on your mind, anything at all that you want to hit. Take a couple minutes.
No pressure. He's talking to like 900 million people right now. Go ahead.
Ooh, I know that's a tricky one. What do I want to say with just 2 minutes? I want to say that banks will get consent orders, and the size of the consent order and how long it lasts is really the only question. And being able to evidence that you know what's going on will help you reduce the impact of those consent orders on your bank. And that goes to the trust that your customers will have in you. That will go to the trust that your vendors will have in you. And it will enable you to ultimately grow faster. So instead of being too scared of consent orders to innovate and to find new ways to build deposits, you should be thinking about how can I give the regulators what they need to reduce the risk, the size, the impact of what's coming down the line. And the ways to give regulators what they need today is to evidence that you understand what is happening with your controls.
That was awesome. That was a really good 2 minutes, by the way, on the spot. Good job.
All right.
Awesome.
A lot of pressure. Thank you so much for chatting with me.
You bet. No, thank you for coming and your message, and we appreciate everything you're doing for the ecosystem. We really
I
need more
really
people
do.
like
I
you.
really
So
do.
thank you.
Yep.